Welcome back, students, to our lecture number 4. Lecture number 3, this is where we stopped about cost, volume, profit analysis. This was the topic we discussed in the last slide about cost, volume, profit analysis, calculate break even, and how we can calculate a target profit, right? So that's what we have seen. So we'll continue with the same topic but some additional exercises and examples. So now we'll continue on example number 8.3. in your books it is there. The Bragg and Stratton company manufactures a specialized motor for chainsaw. The company expect to manufacture and sell 30,000 units, right? In 2015, it can manufacture an additional 10,000 motors without adding new machinery and equipment. Their projected cost for 30,000 are given below. Now this is a direct material cost for 30,000, right? This is direct material cost, this is direct labor cost, this is manufacturing overhead, it is variable and fixed both. Selling, it has variable and fixed both portions. Selling price P is 80. What is the total manufacturing cost if 30,000 units are produced? If you remember, we have solved a question like this one, similar in 8.4. it is this one, right? How we calculated a total manufacturing cost, right? Manufacturing cost per unit. This is a similar question, only addition is some of the topics in break even. So main concept is same. So just review this exercise before you continue on this example. Now, what is the total manufacturing cost per unit if 30,000 units are produced? So what is a manufacturing cost? We need to know as a concept. Manufacturing cost includes material, labor and overhead. Means this one. These are all manufacturing costs, right? This is a period cost, right? Manufacturing cost or product cost are same things, right? So these are product or manufacturing costs and this is period cost. So what is the total manufacturing cost for 30,000 units? So simply we just add all of them, right, and divide by 30,000. So we get a manufacturing cost per unit, easy. What is the total manufacturing cost if 40,000 are produced? Then again we need to calculate it separately. It's easy. What is the contribution margin per unit? Right, P minus V. What is the break-even point in sales volume? We need to calculate first break-even point, X over F, X equal to F over P minus V. Once you have your break-even point, then you can calculate by using P, which is already given, right? This one here, this is the break-even sales is P times break-even point. How to calculate break-even point? This is the formula, and then if you multiply with P, or you can use this formula, both are correct, this one, or you can directly use this formula to calculate break-even sales, both are correct. You can use anyone to find out this value. What is the break-even price on motor if firm is looking for a 300,000 before tax profit? So what is the P here if a firm want to make this profit? In this case, what is the break-even price? Remember P. Which value of P or sale price per unit, not 80, right? In this part, P will be unknown, right? Which price of P will give us this profit? I'll explain later as well. So on next slide, this is the solution. These are all the given information, right? 30,000 units. This is material is given, direct labor, variable overhead, fixed overhead, variable selling, fixed selling. So this is given from same information. I just wrote it down, the same information. So first, the part was total manufacturing cost, which is, as I said before, material, labor and overhead, both this one. So if you add 1, 2, 3, 4, our total manufacturing cost will be 630,000. What is the manufacturing cost per unit? Simply you divide this by 30,000 is 21. But similarly you can calculate here per unit cost. Direct material is 150 divided by 30, you get per unit. Again for labor, for variable overhead, so these are all variable costs. This is a fixed cost. This is how you calculate a per unit, right? Variable selling per unit is 6, 180 divided by 30, fixed is this one. So what is the total manufacturing cost per unit? We already done it. What is total variable cost? Now what is the total variable cost here? We need to know what are the variable cost. Material, labor, overhead, these are all variables, and this one, selling. Here we are not looking at product or period. Here the classification is only based on variable and fixed. So these three are variable always: material, labor, and overheads. Variable overhead, these are variable costs, and this is variable cost. If you add this 1, 2, 3 and these three, you get a total variable cost of 730,000. You can solve it, practice it yourself. Now what is the variable cost per unit? 730 divided by 30,000, 24.33 is the variable cost per unit. Clear? Now what is the variable cost for 40,000 unit? It was not given, right? So we can calculate now. This is 40,000 number of units times 5, you get a material cost, right? 40,000 times 10 is this one. Variable overhead 40,000, 3.33. But fixed overhead you don't have to multiply with this one, remember, because fixed cost does not change. 80,000 whether you produce 30,000 or you produce 40,000 units, so fixed cost remains same. So don't make a mistake here, very important. Fixed cost remains same regardless of number of units, right? So 80 and 80 is same. Variable, this one is 6 times 40 is 240. Again fixed, here it is same. So now we can calculate what are the under 40,000 units, what is the total manufacturing cost. So again material, labor, overhead and fixed overhead. If you add 1, 2, 3, 4, this is your answer. Divide by 40, 20.33. Now variable costs, and as we know that by definition variable cost per unit remains the same, and now you can check it, that one also in this question. If you remember, when we looked at a variable cost per unit, we said that it remains same. This one, variable cost per unit remains the same. If you remember this concept, variable cost per unit remains the same. Total variable cost, this is total variable cost, it will change depending on the number of units. So same thing here, this is just an application of the concept which we learned here in this example. So we can check it in this example, right? So what is the variable cost? 1, 2, 3 and 4. If you add them, 833, oh sorry, 973.33 divided by 40, so you will get same number. You can check it again, 24.33, 24.33. Variable cost per unit is, you can see here, it is same. Or if you want to check fixed variable cost per unit remains same. Now coming back to our question. Now it says what is the total manufacturing cost per unit if 30,000 units are produced. Total manufacturing cost per unit if 30,000 are produced. Total manufacturing cost if 30,000 per unit. So this one 21 is the answer to part A, and this one is the answer to part B, 20.33. See, total manufacturing cost per unit 40,000. So A and B are solved. Next is what is the contribution margin for the motor. What is contribution margin? It is P minus V, right? So if we know what is V, we can calculate. This is P, right? But V is total is given per unit, we can calculate. Now sales price is 80. Variable cost per unit, this is V, right? This one we already calculated V, right? So this is calculated, this is V, either this one or it's the same thing. 24.33 is our V. So this is P, this is V. So contribution margin is P minus V, 55.67. So this part is solved. What is the contribution margin? Next, what is the break-even sales volume? What is the break-even sales volume? F over P minus V. We can easily know, we know what is F. This is F and this is F2F, right? 80 plus 70. Our P minus V is a contribution margin, which we already solved in the previous part. So, or you can see here, fixed cost is 180, right? This is, you have 80 and 70, so 150 is a fixed cost. Break even you can calculate using the formula F over P minus V, right? So just check this one, right? So break even sales volume. What is a break even sales volume? If you don't know, let me show it to you how to calculate. We know already what is F, right? F is 150,000 divided by P minus V, which is this one already, P minus, this is P minus V, this one 55.67. so this is our approximately 2695. If you want to calculate is in terms of, say, this is a volume, remember, sales volume. Volume means the number of units we need to break even. So this is 2695. See what is required here, you can look at it here, volume, right, not dollars, right? So it is volume, means number of units. Last part, what is the break even price on the motors if the firm wants this profit? Means what should be the P which gives us this profit, value of P which gives us this profit. So using our profit equation, right, profit equal to revenue minus cost, or Px minus Vx plus F. So profit is 300,000, P times X is 30,000 minus V times X plus F, right, and solve it for P. So it is, if at this price the firm can make this profit. Okay, now why we need this one? Maybe for a decision making. Remember, you are in the management of this company, you need a request from some customer to reduce the price from 80 to something. They need a special price, not 80, and they want less than 80 price. So if you negotiating with them and you have your target profit in your mind, so if you say, okay, we want to achieve this 300,000 is our target profit for next year, so okay, we cannot go less than this one. So whatever now you negotiate, less than 80, could be 70, 60, whatever you settle on, or this one. But you know that if you sell less than this point, you can achieve this target profit. So this is the purpose of having variable cost and fixed cost, or this is what we call it, a cost volume profit analysis, right? How this analysis will help you to make different types of decisions. So this example, solve it by yourself, have a good practice. Now moving to next example, this is just an example, it's not in your book. I just give another question, that's a different type of a question you may see in your exams or quizzes. So this is easy question. Data concerning Sahara Corporation single product appear. Next, calculate the break even in monthly units. So this is given, sale P is given, V is given, F is given, what is break even? So this one you can very easily solve it, as I said before, using profit equation. Profit is 0, or you can use F over P minus V, you get same number. So in terms of sales, multiply by 150. So it is easy question, you can solve it again and have a practice on your own. If you face any problem, let me know. Now I'm moving to the next slide, which is exercise 8.5. Hyundai Automobile is sponsoring a charity golf tournament to raise monies for some children hospital. There are two possible venues. So now they are, this company, Hyundai, they are sponsoring some event, and these are two locations: Golf Resort and Win Lake Golf and Country Club, right? Both with some information given. These are some cost information. Compute break-even point for each venue, right? So first, how to calculate a break-even point? F over P minus V. This is the formula which we have seen already. Now let's see what are the given information. Now RTJ Golf Club, they have fixed cost of 6,810, and the hotel provides a meal and a waiters and waitress to serve drink and finger food, 60 per person. This is so if you want to rent out this venue, remember, so you have to pay them fixed rent plus 60 per person for foods and drinks and whatever it is, and the fee and a cart for each person will be 35. So this is another variable cost, so 60 and 35. So your V is 95. In this case, this is F, remember F, and this is V, 60 and 35, right? Now this one is for Golf Resort, RTJ. Let's see what do we have in other. Now in Win Lakes, fixed rental cost of 2,400 plus a charge of 100 per person for its own catering, meal, and this one. So this is their V. The green fee and card for each person will be 40. So basically your V will be 140, and this is F for this venue. Okay. Now this is the information. This is fixed and variable cost. This is fixed and variable cost for this venue, right? Now let me put it this way. What is F here for this venue, right? F is 6,810, you can call it. Right, and what is V in this venue? You have two V's, right? Is 60, this one, right? 60 and 35. So you'll have 60 plus 35. This is our V. Similarly, we can check it for second. If I look at a second venue, what is V is, fixed cost is 2,400, and V variable cost is 100 plus 40. So this is F and V for this revenue, this venue. Now Hyundai budgets 5,000 in cost for administration. This is another fixed cost, right? Let me pull it down. Now Hyundai budgets 5,000 in cost for administration and marketing for this event. For this event, it is 5,000. This is independent of these two. This is another fixed cost which incurred by this one, the host who are arranging this event, right? Also they have another for band, for musical band, which is another F, which is 3,000. So I'll say plus 3,000, another fixed cost, tickets to this local community event will be 300%, 300 per person. So basically this is our P. Source of revenue will be the ticket which we will sell, right, which is 300, right, 300. All proceeds of the event will be donated to the children hospital. So whatever they receive, means whatever profit you will get it will go to the charity event for this hospital. It will go to this hospital. So again, now whether to select this event or this one, we'll see, right? You have to choose, and then this is fixed cost, right? And then this is our P, the ticket for this charity event. Part A says compute the break-even point for each venue in terms of tickets sold, that how much ticket we must sell in order to break even. If you are choosing this event, or if you are choosing this event, you have to calculate a break even for each of one. So this is what I'll show on the next slide. So total cost, what is the total cost? We can calculate, right? I just calculated here what is the total cost, right? It should equal to, this is the equation for total cost. You use this equation, or you can use this equation, right? Which is F our P minus V, right? This is more simple, right? So if I use this equation, this is also same thing. Now what is F in this question for number 1 option? F will be 6,810 plus 8,000 for this one, right? So it is 14,810. This one 14,810. How it is calculated? This is for first event, this one plus this one. This is, you get the whole F fixed cost, right? It is going to be this one here, 14,810. This is F divided by P, which is 300, minus V for first event. For this event, for this it is 95. If you add these two, so it is 73. So it means that we must sell 73 tickets minimum to break even, to cover our cost. So if you are planning this event, you should know that we must sell 73 units to break even. This is your bottom line. Of course we want to sell more than this, right? Similarly for second event, we do the same thing. What is F for second event? This one plus this one, is because this cost is common for both venue, right? So F is 2,400 plus this, so it is going to be 10,400 divided by P minus V, which is, what is V? This one 140, right, for this second event. So 65. So 73 is for RTJ and 65 is at this venue if we want to break even. Now in this question, what is part B? At what level of tickets the two venue will have the same operating income or profit? So basically what it says here, at which two venues they will have, both will have the same profit, means how many tickets we must sell so that both have the same profit. So we know how to calculate a profit, right? It is sales minus variable cost using this equation. Sales minus variable cost minus fixed cost, right? And it's easy, then we can calculate, right? This one, sales minus variable cost, and this one, using this equation, this profit equation, for each of the venue, what should be the X? Basically in this question, this is what we are going to do, is we will calculate, this is how you calculate a profit for one event or one site, and then equate it to the another one and calculate the value of X. This one, profit of RTJ event which is this one. This is how we can, this is their profit equation. And profit equation for other is this one, right? This is how you calculate. This is 300, this is sales minus variable and fixed cost, right? And this is for another, and equate both of them to solve it for X. So if you sell 98, then you get a same profit whether you use this venue or you use this venue. So basically this was the question, at which number of tickets sold both venue will have same profit. So if you sell 98 tickets, you will have a same profit. So you can just calculate a profit here. If you, let's say, now we know the X, if you replace X with 98, so this profit and this profit will be same. Okay, so if X is 98, this profit and this profit will same. Again, you can solve and confirm it by yourself, but the question was what is X, so we already calculated X. Next one, exercise 8.12. The Holtz company manufactures a variety of electronic printed circuit board that go into cellular phones. The company has just received an offer from an outside supplier to provide the electrical soldering for Holtz Motorola product line. The quoted price is 4.80 per unit. Holtz is interested in this offer since its own soldering operation is at its peak capacity. Outsourcing option and in-house production option. We have certain information. Now the part A is, should the company accept this offer, or what should be the scenario? So this is basically the question in this problem. Okay, let's understand what is given in this question, right? Now, should they accept this offer or not? So this is what we call it, accept or reject the offer based on given information. Now I'll explain again that this company manufactures, right, PC boards, right, which are used in cellular phones. Now in this process, there is a process called it soldering operation. If you are an electrical engineer, you should know what is a soldering function. Now instead of doing this function by yourself, you receive an offer from someone, right, 4.80 per unit. They say, okay, we'll do this function for you from an outside supplier, right? They say, okay, we'll give at this price, right? So soldering operation from outside, you will get it at 4.80. Should you accept or reject? It depends on how much cost you have internally. If your cost is more than this number, of course you should take their offer, right? But if your internal cost is less than this, you should reject this offer. This is how we are going to make a decision. Now see what is given. Outsourcing option. The company estimates that if a supplier's offer was accepted, direct labor and variable overhead cost would be reduced by 50% and direct material cost would be reduced by 20%. Okay, that if we accept their offer, our price will decrease. Which price? Variable, the direct labor will be reduced by 15% and variable overhead will be reduced by 20% from this given information here. Now under the present operation, all of its own PCB, they do it by own, and this right is given. Slim lines are sold for 20 per unit. This is given. P fixed overhead is 20,000 each year, right? Now breakdown of this cost is given here. Direct material 7.50, And this is what they said, that direct material cost would be reduced by 20% if outsource is taken, and direct labor would be reduced by 15%, right? So direct labor will be reduced by 15%, this number will be reduced by 15%, and this number will be reduced by 20%, right? It's already given here and here, this one. Manufacturing overhead, we don't know yet here which is variable and which is fixed. Let's see if you continue reading this question. The manufacturing overhead of 4, which is this one, right, includes both variable. So basically if you further divide it, 3.80 is variable and 0.2 which is a fixed, right, at this unit of production, right? So if I have to calculate my fixed cost, let's say, just for your information. Now if you see here, what is fixed in this cost, right, in manufacturing overhead, what is a fixed manufacturing overhead and what is a variable manufacturing overhead? Variable manufacturing overhead is 3.8, right, multiply by 100,000 units, $380,000 is our variable cost, right? And what is our fixed cost, which is 0.2. This is how, because it's not known, we can calculate from here what is our fixed cost, right? 100,000 multiply by 0. Multiply by 0.20. So 20,000. So our fixed cost is 20,000. Okay. So now we'll see what is the variable cost, right? This is important now. So if we use this information, if you look at this information, total cost per unit is 16.50, and you're getting an offer of 4.80. Of course, this cost is very high, so we must say, okay, let's go for it. But first, we need to calculate again the total variable cost per unit. On next slide, I'll show you. Yes, this is what we have, the given information, what I have discussed. This is all given in the information, right? If we do it in-house, these are the costs: direct material, direct labor, overhead. This is just a breakup which just I have discussed, right? And if we do it outside, what will happen? Yes, if you do it outside, we pay them 4.80. This is another cost, right? 4.80. Okay, so this is present scenario, this one, right, our existing scenario. And if we do it from outside, this is the additional cost for soldering, which from outside you have to pay. But as a result, if you do it from outside, you pay them this amount. As a result of this one, your material cost will be reduced from 7.5 to 6. How? It's a reduction, as I said, given in the question, right? Reducing the cost of material by 20%. You can go back and check the question. Material cost reduced by 20% and labor cost reduced by 15%, right? So the new material cost is 6, new labor cost is this one. There is a variable overhead also, there is a decrease in variable overhead is given. Fixed overhead, there is no change. So now if you look at it, what is the total cost? It is 18.48 as compared to what we had before, 16.50. So what do you think? Should we go for in-house, means we should do this soldering operation by our own, then this is the cost, or if we go it from outside and do the soldering operation from outside, then including this our cost will be 18.48. So should we accept this offer or not based on these numbers only, right? So what do you think? Should we accept the offer or reject the offer? If you do outsource, it will cost us 18.48, which is high. So we should reject their offer, right? So because the difference, what is the difference in the pricing is this one, right? 18.48 minus 16.50 is the difference, right? So it cost us more. If you want to accept it, we may ask them, okay, reduce this price, right? You have to ask them to reduce the price, because at 4.80 this soldering operation is going to cost you more than the existing one. So it is not a wise to take their price 4.80. So what we can do is we can ask them, okay, reduce this price, right? How much they should reduce, you can ask them. Logically, you must not pay more than 16.50, means this one should be 16.50. So which value of this, let's say if this is unknown and this is 16.50, right? So this is how you bargain with them. You can say, okay, this is the minimum price we must pay, right? So let's say if it is unknown, I will just use a calculator if it's available here. Yes, let's say I'm in a position, I say, okay, this one, see, what is the purpose? Let's say I want to negotiate this price with them. 4.8 is high for me. So I say, no, I don't want to pay 4.8. So how much I will pay? If I add this one, see, 6 plus 4.5, sorry, 4.25 plus 3.23 plus 0.20, right? 13.681 minus 16.5, so 2.82. Now see, if you replace 2.82 here, you will find out that at this price, at 2.82, your cost will be same as what you have before. You can try it, right? So it means, if you are negotiating from this one, from your outside supplier, you can say, okay, we'll pay you 2.82 is the maximum. If you pay more than this, your cost will be higher. So then you can negotiate. Remember, this is to bargaining for decision making. You are a manager and you have to decide with the negotiation with this one. You can say, okay, 4.8 is very high for us. This is the maximum you can pay, or whatever you can negotiate with them. Okay, so this was basically the question, and next one I already solved it, right? At this, which is unknown, this number is unknown, right? What should be the price? The maximum price you must give it to them. So if you solve it, it is going to be what I already solved, 2.82. You can solve it this way or this way, it is correct. Either this is put unknown and solve it for this one, or you can calculate a difference between the price you pay and the difference here, right? 2.82. So both are correct. You do it this way or you do it this way. What was part B? I will go back and show you again. Part B for this question was this one. What is the maximum unit price that Holt's company should be willing to pay to this outside supplier? So the maximum price we must pay to them. We just solved it. What is the maximum price? solving for this one. What is the maximum price? So we already solved it, 2.82. So is it clear now, this question? So I'm going to end my fourth lecture here. As I said before, it is a long chapter. Please listen these slides, watch these slides carefully, solve the questions. Very important. Practice these questions, and we'll have some questions later on from this chapter as well. So try to have a good practice, and best of luck.